Hello there, we're continuing now with the Training Academy project on top-rated forexbrokers.com with one very interesting concept, the basics of Forex trading, the Forex Dashboard. What does it mean? Well, it's the bread and butter of Forex trading. If you want to buy or sell a currency pair, where do we pick it from? It's very simple, the dashboard. What makes the dashboard of the Forex broker, the market watch or the MetaTrader here? Or if you trade with a broker that has an in-house built trading platform, then simply use the search where the currency pairs are offered. This is the dashboard on the MetaTrader, the most popular trading platform. You can simply click and drag and make it as big as you need. Right-click here and you can choose an option to hide all, and only 2 or 3 currency pairs on the Forex dashboard will remain. Or you can click Show All. And then not only the currency pairs are shown here in blue, but also the other products offered by the broker. For example, this broker offers commodities like gold, silver, oil, and so on, but also the major indices via contract for difference or CFDs. But let's focus on the Forex dashboard. So first of all, you click and drag and pull anywhere on this screen, on the left side or the right side, and you can split the screen how you would like, and you can also make it smaller. Let me show you here. And you can pull it here right into the middle of the screen, smaller, bigger, customize as you wish. But let's start by clicking and dragging here and see what the first currency is. And you can move the currencies as you would like. Simply click and drag and it will move to another place. This one is the USD Japanese yen. And what is this one? Well, this is the Australian dollar and the US dollar, and we'll put this here. We also have the GBP and the US dollar. We also have the US dollar CAD. We also have the euro, US dollar somewhere. Let's see if we can find it here. The Great British Pound, Australian dollar, the New Zealand dollar, US dollar, and so on. Euro, US dollar is probably a bit high. So what is the common element in these currency pairs? Let's take a look here. US dollar Swiss franc, Euro US dollar Japanese yen, Aussie dollar US dollar Canadian dollar, and Great British Pound, US dollar, New Zealand dollar, US dollar. So what are these 8 currency pairs? These 8 currency pairs represent the most liquid currency pairs of them all. In the overall Forex dashboard, out of all of these currency pairs here, these 8 represent the most liquid and the most popular to trade. In other words, if you want to trade FX, then you've got to know the faith of the US dollar. This is not random, and I will explain why. First of all, and by far the most important thing, is that the US dollar is the world's reserve currency. What does the world's reserve currency mean? It means that when foreign countries or states decide to invest their fortunes, their excess liquidities to build up reserves for natural disasters, or to simply invest, then they keep their money in a specific currency, and it doesn't need to be a local currency. For example, in the Eurozone reserves, you'll be surprised to hear they will not only be in euros, for diversity reasons, they're also in US dollars. In Japan, you'll be surprised to hear that not all reserves are in Japanese yen, but in US dollars, and of course other currencies too. The currency that has the biggest share in worldwide reserves is, of course, the US dollar. Hence, why all the currency pairs that make up the dashboard and have US dollar in their components and are called majors or major pairs. All the currency pairs that have the dollar in their components are major pairs. What do we have here? We have the usual suspects. We'll show you just a few. We have Euro, US dollar, of course. We also have the US dollar, Swiss franc. We have the US dollar and Japanese yen, you name it, and everything on the left side here that has the dollar in their components is a major pair. Every other currency pair that doesn't have the US dollar in their components is called not a minor, but a cross. This is the only difference between the currency pairs that make up the Forex dashboard. They're either major pairs or crosses. If you open any trading account with various brokers, you'll find out that things are not that straightforward. They will try to put these other currency pairs in various categories. So, for example, you'll have a category called exotics, which sounds fancy, right? Well, exotic currency pairs like New Zealand dollar and Canadian dollar and euro against the Mexican, it's not really that exotic. It's just a cross pair that doesn't have the world's reserve currency in it. You'll be surprised that if you check the statistics of the most traded currency pairs of them all, these are the ones. The ones with the US dollar in their components, and this is normal because the dollar sits at the heart or the very core of our financial system. Then the flows that pour from an investment in overseas must be transferred into dollars and then into that local currency. So imagine for a second a country like Romania buys oil. It cannot buy oil in anything except US dollar. So it will exchange the local currency first into the US dollar, and with those dollars, they will then purchase the oil. This transaction will cause the FX market to move, extrapolate, or put this into perspective, all the international transactions in the world. Then you'll see a reason why major pairs and crosses form the Forex dashboard. Of course, they move differently. Some are more liquid, and the most liquid of these is the euro dollar. Crosses are less liquid. We can see this in the spread. So what is the spread of a currency pair? The difference between the bid and the ask price. Let's have a look at the euro dollar. 18.13.5. 18.13.8 or so. So the spread between the bid and ask is 0 point something, which is quite small, because many parties exchange the euro US dollar, being the most liquid currency pair. But let's go on the New Zealand dollar, Canadian dollar. We have 0.90287, 0.9033, so 1.5 pips. It means it is more expensive or less liquid as a currency pair. This may not seem much, from 1.5 pips to 0 point something. One may say, who cares, as I'm in for 100 pips. But FX trading is not only in for 100 pips, you may be in for 10 pips. You may have a strategy that is excellently executed by an expert advisor, and for that strategy not to fail, it needs to go for 10 pips profit for every trade. If your cost, because this is a cost the moment you buy or sell New Zealand dollar, Canadian dollar, at that very moment you pay the spread of 1.5 pips. And if your take profit to be reached at 10 pips, your real profit will be 10 minus 1.5, and your potential gain is less 15%. I just wanted to explain to you the major difference between major and cross pairs. They are also moving in tandem or in pairs, as for every major. There are 2 crosses. More on that later in this Trading Academy. In the meantime, thank you for being here, and bye for now.